Going on, crew? How we doing? Hope everyone is well. We're back, of course, for our weekly outlook. This is for Euro and Gold. Now, we do these outlooks every single week, generally in the morning on Monday, and this is just to give you an idea of higher time frame moves that we could potentially see across the two major pairs that we look at, which is Gold and Euro. Now, as I've said before, and I'll say again, whenever we show these markups, this is not for a precision mapping of what price is definitely going to do. This is a rough outlook of a potential move that could form. Now keep that in mind because what it is going to take your discretion and your understanding in price to be able to negotiate those movements. So today we are looking at the two pairs that we always look at, and we're going to start off with a quick recap of last week. Now, when we go across to last week, you can see them here, the 20th. You will see the same biasing progress that we do every single week, which is based off of the trajectory of fundamentals and the higher time frame institutional movement. And then we have potentials for pullbacks if they occur, and of course the more probable move, which is the continuation. Now, when we play this forwards, you'll see that this week we had, or sorry, last week we had a very clean play following that sell side move. This is what I said before. Something is selling, don't expect it to just change, right? Now, coming into this week, we are actually at the point where the averaging for the institutional trajectory is beginning to change. Now, what that means is it's not about a trend line break and retest, it's about the principle that the average pricing that the institute is selling this asset follows where the peaks and lows sit, okay? Giving you your trend line, if you were. Now, what this means is when they start to average their positions, instead of, let's say, the average of 90% they're selling, they begin to change the averaging so price pushes above that point. It means there is a chance that the institutes are beginning to reaccumulate orders and they're looking for potentially better pricing. The reason for this is because you cannot have pricing just selling, 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 because it becomes inaccessible for good trades to be made on their behalf. Now, the reason I say this is because they want to be buying at nice prices and they want to be selling at nice prices as well. So for us, we can change our profits, or we can turn our profits, sorry, relatively quickly with short-term moves, small moves. They need big, big chunky moves for the kind of orders they're trying to capitalize on. So because of this, there is potential for a push from this averaging line up into a better area of pricing. So in this case, an area of supply. This high that holds the area of supply can also act as an area of better pricing because this is going to be an area where a lot of sell stops are going to be placed, and pricing from here would be ideal because an accumulation of retail orders into a new push down would be a very standard move for Institute. But there is also the option where they're not happy with the pricing at this level and they want to go even higher. Okay, but the main focus this week is that we are still bearish. Yes, we may see a push from here, but we're looking to sell again. Yes, we may see price push through and liquidate the low, but we're looking for a small pullback and then a sell again. So don't get your hopes up for price action just buying. If it does begin to buy and it changes our bias on a higher time frame, so for example, it opens a daily gap, then we will look to change our directional bias. But for now, it is only sell. So I'll play this from here and you'll see what we have so far in the trading session. We have a push up from the area that we pointed out and we have interacted with the area of supply. So remember, using the systems that we teach you in our live streams and that we show you in our Discord, as well as the Keep It Simple series, you can easily negotiate the principles that I have on my screen here and find entries based around the movement. So don't waste your time trying to jump on every single movement there is. Find the easiest way to navigate. Don't read the map upside down, read it the right way and just follow the simple compass spacing. From this movement here, I'm expecting possibly a slightly push higher and then a sell back down or a liquidation of this high. Either or, it's going to lead us into potential sells if the entries are given. So let's head over to gold. Get back. One. Okay. So from here, we'll go over to the 20th. Remember guys, if you're not already following me on TradingView, then I highly recommend it as we post our charts every Sunday. Gives you an idea of what we're looking at and you can just follow the basis here. Use it to compare so you know you're looking at the right basis on the time frame as well. So again, we were calling all-time highs on gold and we took out the all-time highs, not loading because it's historical data, but we were just looking for pricing to go higher. We had a liquid low here. We also have our trajectory for the Institute. This is the averaging area that they're buying price up from. That's where they prefer to see. Now, the reason, I'll explain a little bit why we use the institutional trajectory. Now, the reason for that is because if you were to look at it in terms of like a moving average, if you were, this is the average amount of discount they look for every time pricing puts in a new high, for example. So it would be like a 15% discount on pricing. Then they'd buy back. Then again, a 15% discount on pricing. Then they'd buy back. That's generally what they're going to stick to. The same kind of investment scheme along period of time. But they will change that and they'll say, well, we're not happy with 15% now. We want to change that. That's when you see the crossover of that averaging area. So let's play this forwards and you'll see what we had. And we in fact had a really nice push and exactly the same example that I just showed you, which is where we get that averaging price dropping down, let's say 15%, and they buy up some more. Then they drop down again back to that level and they buy up some more. Then we've of course had the weekend. Fundamentals have affected gold in some way, and we open with a gap. Now, coming on to the new chart, you can see that we have this factored in. We did make a small adjustment of the averaging here, but we've looked now towards, again, you probably guessed it, a new all-time high, a reaction at this area of averaging, so price action coming up into this high and selling off or breaking through here, seeking the liquid lows on the 4-hour time frame. And from here, we'd look for price action to buy up. Now, of course, we could interact with this low or this low, but we didn't highlight them both because it's really irrelevant which low we interact with. It's more the principle that helps us, right? So it's very simple. Price is traveling up. Look for a good place to buy it from. Price is traveling down. Look for a good place to sell it from. We do the same thing every week. And like I said before, you can go over and check out all of the previous markups that we've given, and they all have the same simplistic basis. Now, of course, there are some charts you're going to find way back when I'm marking up a structural narrative, but that, of course, was before the birth of my child and the birth of the simplistic entry and exit system. So when I play this forwards here, you'll see that we're just reacting around this level at the moment. And Institute are ultimately deciding whether they want to continue buying up or if they're going to sell off these positions. So based off of that principle, just let price settle in a little bit. I will say there is a gap at the high where price was on Friday, so that is always likely to be filled. Whether it's going to be filled today, tomorrow, Wednesday, Thursday, Friday is irrelevant. It's more of a case of where do we get to first? Do we get to a price targeting point or do we get to a price entry point? That's the points we need to be aware of. So as always, guys, if you haven't already watched the Keep It Simple series, make sure you head over to the playlist there and watch that. Had some amazing feedback from that, so you could be the next person to give me that amazing feedback. As always as well, if you're not a subscriber, then hit that subscribe button, hit the like button, and hopefully catch you in the Discord. See you all very soon. We'll be hosting a live stream later on today, so don't miss that. Hope you all had an amazing weekend, and I'll catch you all very soon, guys. Hope this markup and weekly outlook has been useful to you, and I'll see you very soon. Off now.